Hello, welcome back to Laptop Trader Channel on YouTube. My name's Philip, and I'll be hosting this. I'm here to share my trading experience and give back to the stock trading community one video at a time. This channel is mainly for new traders or new investors, but all are welcome. Welcome back to April 2026. Have a happy Easter. My goal is to educate you and get you up to speed and to keep you from losing money in trading and to help you understand the markets from a technical view. I publish basically a monthly video with sometimes extra update in the middle of the month, which covers current markets, stocks, ETFs. Our education and information covers different stages, technicals, some fundamentals, um, different topics about trading, and how to create confidence by putting the odds in your favor. Okay? If you wish to be updated when new videos are published, hit subscribe now. If you have any personal questions, my email contact is laptoptraderphil@gmail.com. This video is for information purposes only and should not be considered investing advice. Caution, trade at your own risk. Most stock day traders lose money. Please protect yourself at all times. Any stock suggestions or ideas are up to you to decide if that is appropriate for you. Okay, good luck and God bless. Where are we going to start? We're going to start now by educating ourselves on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. This is a newer slide that I've decided to include. What does it mean to protect yourself at all times? Again, trading and or investing involves risk, and you can lose money when you put money at risk. However, no risk, no reward. If you do not take any risks in the market or in life, then you cannot expect a reward or expect to grow your capital money. Average total market return over time is about 10%. So we're going to try to beat that. My risk strategy is based on the fact that you can't lose what is not at risk for an inexperienced trader. These rules are part of my plan and have kept me out of trouble and in the game. Okay, so I've got so just some basic rules here. I'm not going to read them all. I will leave this slide up for about another 10 or 15 seconds if you guys want to take a screenshot. But basically, you're going to use position size versus your account size versus your net worth. It's okay to diversify if you don't feel like trading. You should use a stop loss order or share size. If you have a loss, it should be small. Do not borrow money to invest or to trade in the stock market. Take some time and do some study of companies and charts. And then I gave an example of what some basic risk sizing would look like. So we'll leave that there if you want to screenshot that. Take a drink of water. Excuse me. Anyway, our agenda for this month. News-driven markets, right? War, politics, economy, etc. I have a few slides and then some live charts. Last month we were still in a consolidation. Well, the market has now changed. Markets are like life. We just don't know what is coming up next. So we are no longer in a base consolidation in the overall markets. We were down in March. We are now having a correction in price. We're in a corrective market environment. We're correcting down in price. S&P 500 is down about 5.2% in March. The QQQ NASDAQ is down about 4.96%. The Diamonds ETF is down about 5.41%, which tracks the Dow Jones Industrial Average. And the IWM, which tracks the Russell 2000, is down about 5.13%. So we're having a broad overall market correction. That's the environment we are in, which in my opinion was kind of expected this year anyway. So then we're going to go into some market review. We'll get to some charts. We'll do some sector charts review. I already talked about this last month, but what to do when your stock or investment is trending in the right direction and how to hold on for longer gains. So I use longer time frame charts using monthly or weekly charts to try to hold on for larger gains. And I'll show you an example of that using GPRE stock. One of the best times to study the market is right now in a down market to see what it looks like and feels like if you have investments, right? It's not fun to have a losing investment or an investment that is going down in value. So it takes some emotional training to get through that. Some stocks will have some relative strength. We look for high probability setups, not guarantees. We still need to protect ourselves with position size and share sizing based on our account size. It's a great time to step back or even stop trading and then evaluate any previous trades and make any adjustments to our trading plan. Also, a great time if you are new to the market to save up some capital money for the next big idea or bull market. It's a great time to also stay the course and keep dollar cost averaging into your long-term investment funds. All right, so again, what to study when markets are correcting. I shared this last month. I'll just put this up here again if you want to screenshot this. But, study the market indexes versus any major moving averages. What's the environment like? What is the news like right now? What's the context, right? This is not a great time for buying and going long, but there are still some opportunities. What industries or stocks are strong right now or holding up in a down market? These should be on your watch list. And I'm going to give you, towards the end of this video, about 10 or 12 that are on my watch list. So I will give you guys some ideas this month. Study some price action of previous winners. Study price relative to any moving averages on individual stocks. Study price relative to pivots or former areas of interest on the chart. Look at wide price ranges and volatility versus narrow price ranges. What were the opportunities based on those areas? Look for areas of price consolidation or bases, any bases in a chart. Doing some basic comparative analysis using price charts and probably looking at some fundamentals too, right? Are there companies right now that have really good fundamentals, but are really down in price? I can think of, Microsoft comes to mind as a great example of that. I don't think Microsoft's going out of business, but their chart, they've really been hit hard in this market. There will be another bull market and some new idea or company that changes the way we live and do business. We just have to watch for it, find it, and invest in it when it appears. Okay, so think back, even 10 or 20 years ago, were you using a rideshare company like Uber or Lyft? Were you streaming video using, Disney or Netflix or Hulu? Were you doing a lot of online shopping, or was that just kind of, something you just did every now and then? Well, you have to answer those questions for yourself. But there were some opportunities in those industries going back, 10, 15, 20 years. So, having said that, let's get to some live charts. Excuse me, it's a little bit dry in this house. Let's get to our market review. Okay, so here's the S&P 500 ETF SPY, symbol SPY. Again, here's March, right? We had sideways, correcting through time, and now in March we get this price correction of over 5%. Okay, coming back to this shorter term 12-month moving average. Will it bounce here or not? We don't know yet because we don't have a lot of information yet for April. But this past week, we did get a little bit of a bounce in the market. So we'd been down 1, 2, 3, 4, 5 weeks in a row. And this week we got a little bit of a bounce. So is that enough to make this market correct back upward? I don't know, but time will tell. That's a start, so we'll just have to see what happens. Okay. Let's see. NASDAQ has been correcting since November of 2025 through price and time. It was down in February, 2.34%, down in March, just under 5%, 4.96%. So that has corrected quite a bit. This was correcting first. The NASDAQ is more of a tech-heavy ETF. That may be somewhat of a catalyst to start going back up. The evidence so far is guilty until innocent. Okay, so we've been correcting. Reversal this week, but that's just 1 week. So we need to see a little more information before we just jump back in. But as far as a trader goes, okay, Diamonds ETF was in an uptrend until March of this year. So this had some relative strength until March when it gapped down. It was down 5.41%. IWM, same story, uptrend for most of 2025. And then here in March of 2026, down 5%. So correcting through price. And finally, transports were in an uptrend until March, down just under 9%, 8.78%. There's a lot of volume for some reason going into transports here early in April. An unusual amount of volume actually. And will this turn around and go higher? It looks like it might. You know, if Wall Street likes this ETF, that's a nice reversal candle there, engulfing candle versus the previous two. That could be also a start for a market turnaround. We'll find out. But that is it for now for that quick market review. Let's get to, you know what, I'm going to give you some ideas first before we get to sector and some other industry review. One industry right now that's really on my chart, and I don't really understand the fundamentals of this industry, but therapeutics. It seems like every other stock I come across with the name therapeutics in the title is seems to be doing pretty well, and I don't really know why that is, but I do have one or two in my portfolio. Okay, here's an idea quickly for you to keep an eye on. So this is on my watch list. Open Company, which stands for Open Door Technologies. We had this nice move up in July last year, and then we had this pullback through price and time, and it's just the momentum down is kind of slowed down here. Where this could, if this flips up, this could give us a pretty good buying opportunity in that company. So that's an idea. Let's get to the next one. GPRE, this is currently a hold for me. I entered back here when it was consolidating, and then it broke out from that consolidation here in January of this year. But I've been holding this since, I believe, November. I bought this consolidation, so I've experienced a nice gain in GPRE. I think it still has quite a bit of room to the upside, considering that we've been in a down market this year and this has gone up. So that is a hold for me right now. I've got a full position on that. Let's get to the next one. Let me go this way so I can get you the proper symbols. MD, symbol MD, Pediatrics Medical Group. So this had a nice move up here, consolidated, moved up again. Now it's consolidated through price and time. We've got a bottoming tail candle here on earnings in February. We got a reversal up in March, up over almost 7.75%. And so if that continues higher or follows through up, this has a nice opportunity to move up into this void where there is no price resistance. So that's why I like that company. We've got, this is CREX, which stands for Creative Realities. I believe it is either an AI or a virtual reality company, but just has kind of this rounded bottom after an expansion candle up. Now this doesn't look like much, but this expansion candle back in May of 2025 was almost 72% in a month up. So this looks like this is going to continue possibly. It was up in February, 12%, slightly down in March, only minus 1.7. Remember, the market overall was down over 5%. and now so far in April up 1.7. So this kind of break even here in these last 2 months. Nice tight consolidation. If that gets moving up, that has a lot of upside potential. In CREX, we've got Lunar Company, which is a space aerospace company. We've got a nice move up here back in December, almost 71%, right? And then it went sideways, sideways, and sideways these 3 months. Then after earnings, it kind of popped up, went up almost 30% in here in April. Let me show you that on a weekly chart. This is a little more dramatic on a weekly chart. So you can see this had moved up, consolidated through price and time, and then just this week it's up a lot. Over 36%, almost 37% in a week. That's real, very strong. So that is, I do own a few shares of that. So that is definitely on my long-term list to continue higher because it's in an industry that I like, in the space exploration industry. Then we've got Intel, which is a semiconductor company which had been beaten down for a long time. Did not participate with the other semiconductors in the rallies, but recently has been moving up. Looks like it's kind of made this, I don't know what you would call it, but kind of moved up, consolidated, and then has again starting to move up again here in April. So that is on my list. Here is a company that's in the therapeutics business, or Oruka Therapeutics. I don't understand the industry, but every time I look at a chart and then it has whatever company name followed by therapeutics, seems to be doing pretty good. And this has been doing pretty good over the last year, 18 months. So I'm already in this one. I was in back here during this consolidation period, and now it's kind of popped up. And it looks like this just wants to possibly continue higher, but it is extended on the monthly and the weekly chart. A better entry point would have been right in this area. So it's definitely a little bit, it's probably too far to enter right now. But if we got a pullback opportunity, that could be an idea for you guys. And there's other therapeutics companies I've seen too that are decent opportunities. But right now, this is a little bit extended. Then we've got VRT. This company does a lot of volume, kind of a larger cap company. But this had this pattern where it pulled back, went up, went sideways, and then kind of broke out. A couple months pullback, and then gave us this kind of cup and handle deal here. And nice buy point. That would have been back here about 198, 199. It's now at 261. So this is a little bit extended, but sometimes these companies that have that momentum, remember, the market has been down this year, and this one just seems to kind of keep wanting to keep going higher. So this is, I still think that's probably a decent opportunity. Let's see, CoreWeave, CRWV. This one was kind of, it really exploded after its IPO, but then since, July, August last year, it's really been in this downtrend, okay? But has been consolidating now for the last couple months. If this can flip up, I think this one has the possibility to be possibly a decent winner. It's, like I said, it's been consolidating here over these last couple months, 3 months. If this can get over any resistance through this area, if you just drew a box around this area, I think that would give us an opportunity with a void up to $200 on CoreWeave. It still has some work to do, but maybe this week or the next couple of weeks could prove to be possibly a decent opportunity in that one. That's still a watch. And then we've got this company, which is in a renewable energy industry. Unfortunately, this one had on a weekly chart, had this cup, came up to the buy point over this pivot, kind of a failed handle. It has improved over the last few weeks on volume. I think if this could go sideways a little bit through this area and then pop up, I think that could possibly be an opportunity. That's on a watch for me. Plug Power is one I currently have some shares. I do own some of this stock right now, but this had a pretty decent pullback last year and has been sideways ever since, but it's gotten tighter over the last 4 weeks. And this week alone was up over 10.5% on this week. So this is looking like it kind of had that move up on earnings back in first week of March and has since been kind of sideways. It closed on earnings at $2.13, and this week closed at $2.41, up 7% for the week. So this looks like it could be a continuation higher into this void area, up to, possibly up to $4.5. So that is a possible opportunity. On the monthly chart, it's going to look very tight. So that's what the monthly chart looks like there. So just going sideways, but just slightly ticking up there. So that is a possible opportunity there. And one more. BORR company, Boring Drilling. Had a nice move up off the bottom, has been consolidating here the past few months. If this could get going up again, this has a lot of opportunity to the upside. So that is it for some possible ideas. Again, I look for base consolidations like this and then into expansion up. I hope you guys are getting the point on that, where I'm looking for, these bases, and then I'm looking for expansion to the upside. So I like to buy low volatility, and I like to sell higher volatility. Here's one again that I've been holding for quite a while. I've got a nice gain in that one. So let's get to our ETF list. Let's go over some of the sectors. What has happened since last month? Let me take a quick drink while that loads up. Okay, Bitcoin had a high price October of 126,184, closed October at 109,471, is currently at 67,177 and change. So still in a downtrend on Bitcoin. Let's look at the weekly chart of that, even though I don't own it. I know a lot of people watch it. So my comment is still, down, trend sideways down, sideways, still in a downtrend. Not much has changed since last month. So that is my only comment on Bitcoin. Again, I've already commented on the S&P 500. I've already commented on the Qs. The equally weighted Qs, very similar looking to the NASDAQ 100, which is weighted. I've already commented on the Russell 2000 ETF, IWM. I've already commented on the Dow Jones Industrials, the DIA ETF, and the transports. Okay, this is definitely going to be one to watch, though. This transports with that amount of volume. If that flips up this month, that could be a pretty decent opportunity in that ETF if you like ETF trading or investing. And we watch the VIX. So where is the VIX in relationship to the last few months? Well, VIX closed in February at 1986, which is slightly elevated. And then it closed in February at over 25, which is more elevated, get more to a fear environment, or an environment of fear. And then closed this month, opened April at 24.3, is down slightly for the month. So volatility is starting to slowly come out of the VIX. Remember, in March, we had a high in the VIX of over 35. That's really extended fear and extended volatility. And so, again, I've shown you guys before that you can see volatility on the chart when you zoom in a little bit. Let's say we go to a daily chart. You can see the volatility in any chart. And remember, when markets move down, that's generally higher volatility. And when you've got, this up, down, up, down, up, down, that scares people, that scares investors, creates fear. and that's why you see an increase in overall market volatility as measured by the VIX. Okay, so that's all I have to say about that. Let's look at mid-cap ETF. Again, very similar story to really the IWM, where we had this nice uptrend into February, made a new high in February, and then reversed pretty hard, down 5.5% in March. So will there be enough buyers to start to get these markets to go back up? I don't know yet. That remains to be seen. So we're going to have to react to whatever the market gives us. Just like we had to react to this new high in February, followed by a down month in March, right? Markets can turn very quickly. And so the small caps were down 4.41% in March. Let's take a look at the energy ETF XLE. This has been the place to be in the market over the last 3 months. Energy, right? At this huge base, which started back in June of 2022. So you're talking about 23, 24, 25, and then into 2026, over 3 years base, and then just took off, in January, February, and March. So that has really been the place to be. I personally don't have a lot of holdings in energy, but that I'm sure my market fund does have some holdings in there. So I'm still exposed to that market through my mutual funds, but I don't have a whole lot of exposure other than maybe Plug Power, which I don't know if that really relates to this. This is more oil and gas, this energy ETF, but that's been very strong. XLF, the financial sector, has been the reverse of this. So this has been selling off since January, February, and March, down another 4% in March. So this was down 2.4% in January, down 3.76 in February, and then down another 4% in March. So if we add that up, we're looking at about 10%, right? Nice 10% correction of financials this year. So that has been a drag on the market. Consumer discretionary, consumer spending has been down this year. Again, this made a new high in January and then has been selling off ever since February and March, right down, again, about 10% correction in consumer discretionary spending. So not good for consumers. The healthcare sector looked good until March. Looked real good until March. Corrected over 8% in March alone. So that healthcare industry has really been hit hard by this market pullback. Technology sector has been more just kind of each month going down a little bit, kind of following the NASDAQ down minus 4% alone in March, and then has flipped back up a little bit here in April, up 2.3%. So we'll see if this can, get a reversal up in technology. Utilities has, for the last year plus, has been a pretty good place to be. This looks like it's setting up, this is called like a pennant pattern, and a lot of times this will result in higher prices, not always, but that pattern looks really good in utilities if you like investing in utilities. Industrial sector, again, had a pretty good correction here in March. Will the correction continue? April, that remains to be seen, but this could flip up or flip down either way. So just kind of watch out for that. Materials sector had a down month in March, over 6%, but left a bottoming tail. That's interesting. And now we've got April. Will this reverse? If this becomes a green with this red bar sandwich in the middle and this closes up here, that would be very positive for the economy, the market, and this sector for sure, because then we'd have that kind of that 3-bar sandwich in materials. Communications, pretty much sideways for the last 8 months, and then it went down in March over 6%. So can this recover quickly? We'll find out here. If it does, that could present some opportunities in communications. In consumer staples, right, up in February and then just completely reversed in March. That was very disappointing. But again, that's what we've seen in the market, kind of this false breakout and reversal down in March. So that's kind of where we're at with that one. Real estate, more sideways trend. Up in February, reversal down in March. Maybe this will reverse in April. Again, if we get that green, red, green, that 3-bar sandwich, this could be, another nice place to be in 2026 in that real estate sector or stocks within real estate. I don't really care too much about the dollar. I do care about the 10-year Treasury note. Again, this is the chart to watch if you want to know where interest rates have been when it comes to general borrowing, like home loans, and where interest rates are kind of potentially headed to. This is not a fast-moving chart, but you can see we had this general downtrend in interest rates until March. So interest rates going up, stocks going down in March. We closed February at 3.96, just under 4, and closed March at 4.31. So interest rates have kind of flipped back up, and that's probably not good for stocks in general. But again, there is some opportunities out there. Let's take a look at retail XRT. So this retail spider, this retail ETF looked really good until March. Well, can this flip up in April? If this flips up in April, we get that reversal up. That could be an opportunity to go long retail. I was looking at some retail stocks that actually don't look that bad when it comes to the major retailers. The semiconductor ETF still has some relative strength to it. This was the market leader, right? Semiconductors, AI, quantum computing last year was another leader. Biotechs were leaders. Can this just pull back, give us this soft landing, and then flip back up in semiconductors? That's possible. Here is an ETF of biotechs. That's had a lot of relative strength, right? Just going sideways basically for 5 months. That looks like that could continue higher. It could reverse lower, but so far has not. So that lets me know that there's just not a lot of selling going on right now in that industry. What else can we look at? Blockchain, this is probably down. Yeah, that's down based on Bitcoin. Marijuana ETF, still pretty sideways, not doing much. Foreign stocks like Brazil, showing some relative strength. I like that. Argentina, showing some relative strength for sure. So that's a possible long play, long term, if you like to invest in Brazil or Argentina. This is one I watched called the 50 Innovator 50. Definitely hit by the market in March. Can that flip up? Possibly. Oil services. That's been the place to be. Oil. I think this may have run its course too. We'll see if oil can maintain this trajectory. Usually, it's not the case. Usually, historically speaking, if oil continues up, that's going to be very bad for the overall economy. That's one of the signs that the economy is not doing too great. If oil and commodities continue this trajectory higher, that is going to put a real damper on economic activity and will result most likely in lower market prices and possibly some sort of general economic correction. Let's see, natural gas still in a sideways bottoming pattern, not much there to report on. Internet stocks, downtrend. Home builders, definitely not looking good. Here's this ETF I watch. Bots are AI, looked good last year, and then in this March sold off pretty hard. tan. This is solar. So solars look pretty good over the last year or so. It's looked pretty good. Nice consolidation here. Not pulling back in March with the market. Just kind of went sideways, up slightly, 1.29%. So far has corrected a little bit in April, but if this can just maintain, this could, solar stocks have been doing pretty good overall. Travel stocks like jets, they've been hit kind of hard. Cloud computing, that's been hit pretty hard. Let's see about this dividend ETF. That's been, that's definitely reversed in March, but not as much as the market. So this is a possible, if I was going to buy an ETF, this is not a bad ETF. SCHD from Schwab is not too bad. That's had a pullback, but not nearly as bad as the market. SCHB, this basically tracks the market. This is it's down just like the market, 5.25%, but good overall broad market ETF there. All right, let's go to a few other industries that I watch. This may give you guys some other ideas. Let me look at not market leaders. Let's check out hotel casinos. Let's see if that's changed at all. Look at performance. If we just do like a 1 month change, yeah. So casinos have been doing okay over the last 1 month period and 3 month period. This is one area that I've been watching, thinking about investing in. It just seems like gambling is part of our culture, okay? And this has a pretty nice bottoming pattern to it. Up in February, 21%, up in March, over 5%. And so far, slightly positive in April. So Caesars Entertainment, that looks pretty good. This is the foreign stock online from Luxembourg. That looks pretty good. MGM Casinos, we had a low point, higher low, kind of that green, red, green. Bottoming tail in March, up slightly. That looks like that could continue higher, but definitely Caesars has some relative strength. No. DraftKings pretty weak. Okay. LVS, Las Vegas Sands. That looks better. Definitely had a nice, pretty serious pullback. I like Caesars better. I like those first 2 or 3 better. Caesars, CDRO, maybe MGM. Those 3 don't look too bad. So that'll give you some ideas in that industry. Let's take a look at retail brands. Let's take a look at some retail brands because the ETF doesn't look great. We can screen this through performance again. We can do maybe 1 month change. We can take a look at 3 month change. And that should give us a few ideas in retail. This is one that's definitely on my list, RingCentral. Look at the volume. Uniting volume up over 40% in February, right? When the market was basically down or sideways. And up 2% in March when the market was down. So far in April, up slightly, 1.59%. So I really like this one. This is probably one of my top ideas right now. RingCentral, symbol RNG. That has a nice big fat void for price to move up into, and is a popular company. Kroger has some relative strength if you like a grocery operator. That's not going to give you a huge potential upside, but it would be something a little more slow and steady wins the race. Grove, no, that's been a disappointment. GME, that's kind of just no. Walmart, basically the king of retail, right? Walmart. Look at this consolidation of Walmart since May, June, July of last year, and then This is what I'm talking. This is exactly what I'm looking for in a major stock. Consolidation, right? Look at the closing prices: 98.72, 97.78 close, 97.98, and then 96.98, and then just goes on this run since September of last year, and only down 2.87% in May. It looks like it might flip up here in April. I don't know, but Walmart has definitely had some relative strength. Another great stock, slow and steady wins the race over time. Kudos to Walmart. Academy Sports, yeah, that looks decent. Did close down in May with the market. Up slightly here in April. That's a possible idea. CarMax. No, I don't like it. Still in a downtrend, even though it's bottoming pattern, still below all the moving averages. That's just a watch. City Trends. Don't know much about the company. I believe it's a retail company, but yeah, down in March. Possibly flips up in May, but it consolidating for sure over the last 5 months. That's a possible idea. They do make money. Looks like they have net profits, so that's a possibility. Philip Morris, no, I don't like it. Signet Jewelers, no, don't like it anymore. Crocs, bottoming pattern, trading below all the moving averages, no, I don't like it. Don't recognize the company, so I don't like it. AutoNation. So if you ever wanted to invest in car dealers, this is a big company that operates different car dealers. Had an all-time high September last year. It has been pulling back since then with the market. Down in February, 4.79%, but slightly up in March. So that kind of outperformed the market in March, and so far has kind of went up a little bit here in April. This is a possible idea, if you like that industry, to go long over, probably over 200. If it gets over that 200 mark, that would be over March's close. I wouldn't get overexposed to that, but that is an idea if you like the car market. Apple, pretty much just following the market down. If the market flips up, Apple has really shown some relative strength to the other Mag 7 stocks, right? Like Microsoft, Google, Netflix, etc. Netflix, I do like. I don't see that chart here, but let me find that for you guys. I call it the Super 8 because I include Bitcoin in that. But if we look at these charts real quick, these were our market leaders, right? Microsoft, downtrend. Amazon, downtrend. Google, bit of a downtrend there, pulling back. That's another one that's had, yeah, it's pulled back with the market, but it's still trading above all these long-term moving averages. So I like Google. Nvidia, pulling back to the moving averages. Meta, really sold off hard, don't like it. Netflix has already kind of made this turn. So look at this. Netflix was selling off since July of last year. And I believe this is when it split. They had a stock split, 10-for-1 or something like that. But flipped up February, went positive in February, up slightly in March. So relative strength to the market, and now already up over 2% in April. So I really like Netflix here long term. Like the company. Tesla, reverse. Downtrend, don't like Tesla. Apple, again, just kind of pulling back with the market to the longer term, shorter term moving average. If that flips up, I like Apple. I like Netflix and Google. And then obviously Bitcoin there. I'm not a fan of Bitcoin, but I think that's probably enough for you guys to think about. I do want to leave you with one more thing, and that is if we go to a watch list, if I go to this week's list, okay, so far I've narrowed down this week's list to 107 stocks. See that? Now, one quick way to sort and segregate this list is if I go here, at least on this platform, if I go to a performance sort, And now I can choose, I can sort by weighted alpha. I can sort by, again, this is showing these therapeutics companies up here. See that? Therapeutics. If I go down this list, I bet you there's some other therapeutics companies. Here's pharmaceuticals, some immunoprecise antibodies. I don't know what that is. But I've seen that word, therapeutics, in many of these searches. Here's another one, Grace Therapeutics. I don't know what they're selling, if that's just natural ointments. I don't know what they're selling, but their stocks are doing really good. Let's look at some of these charts. Relmada Therapeutics. Looks really good to me, right? Went up over 52% in March when the market was down. So I like that. Like I said, Orca, I am already in. That's a bit extended right now to get involved in. Where was that other one? Lunar. Oh, here it is. Grace Therapeutics, symbol GRCE. Another one. Look at the volume coming into the stock. 500,000 volume in March, up almost 8%. More volume coming into it in April. Already up 10% in April. So this has a lot of void, a lot of space to move up into as far as the chart goes for Grace. But that's one way to sort. If you keep a watch list, sort by performance, right? Another one I really like is the 3-month performance sort. That'll give me some different companies that I can look at. Here's that IPA again on the top of that list. That chart looks good. I don't understand the company, but I can do some more homework on that. Satellogic, probably related to space exploration. Here's that 3-bar sandwich, right? Green, red, green. Kind of buy over those top of those two. That's right there. That has some room to move up to probably at least $10. Not a terrible idea. Lightwave Logic, not a terrible idea. AEHR, a little bit extended there. No, don't like it. No. That's not too bad. If this could stay right there, if this just kind of stays in this little general range across here, that could be a possible idea next month. This is one I bought recently. I bought a small position in Tron Inc. because it went sideways, moved up in March alone, almost 67%. So I'm already involved in Tron. I've got a small position in that one. GLW Corning was a big winner last year, kind of forming this bull flag. If you were to draw lines through these, you'd see that bull flag with price pressure pushing up. That looks like that definitely has some relative strength to Corning. RLMD Therapeutics, another therapeutics company, right? Sideways, up in March over 52%. So something's going on in that industry. Modine Manufacturing, another one with kind of this bull flag where it's kind of just going sideways. This may have to go sideways for another month or two, and then, if the market turns up, this may be another one that's heading higher. Solar Edge, solar company, I mentioned TAN, the solar ETF. This is one within that industry. Up 14%, over 14% in February, and up another over 44% in March. So solar looking very positive going forward. And Powell still on a nice uptrend. So really extended though from the moving averages. I wouldn't buy that there. So I think I'm going to end it on that. That should give you guys some areas to look at. Another popular watch list I have is my let's see, it's called, I've been watching these space companies. It seems like aero and defense and space right now are going to be a theme going forward. So here's some ideas for you there. Tesla, who knows if that will be involved in space or not, or if that's going to be related to Elon Musk's other companies or not, I don't know. But PL, Planet Labs, big move up, extended, too late. Rocket Lab has had a nice pullback to this moving average. That's a possibility. Lunar, again, breaking out in April so far. That looks good. I like that long term. Google, will they get involved in the space race? We'll find out. Firefly Aerospace has kind of this, that hook pattern, so that's a possibility. There's a lot of money going into this industry, guys. If you take 8.79 million shares times that price, you're looking at probably over $100 million alone into that company. ATI kind of extended up. CRS, WWD, Woodward, SATS. A lot of these are extended up right now. They may need to correct through price and or time to give us a better opportunity. This is a ETF. You could, I don't know what's all in this ETF. You'd have to do your homework, but symbol MISL. That's a possible idea to investigate for yourself. UFO, I do have some holdings. I do hold some of this ETF, symbol UFO. So I bought that here in February or March. I bought that. So this is nice because I'm already up, over 9% in April. So again, I think space is the future for whatever reason. And there's definitely money flowing into that. This is ARK Innovation ETF, symbol ARKX. That's pulling back to the moving average. Finally, YSS. York Space Systems, individual stock that has so far flipped up over 26% in April. Again, these are fairly speculative names. These are new companies, fairly new companies. So watch your risk. Okay, that's it. I'm going to end it there. I think that's long enough. Thanks for coming by. Thanks for watching, subscribing, sharing this channel, making it a success. I never thought I would be this successful, but success can be fun. Again, educate yourself now on how markets work and finding out what is right for you. Invest in yourself, then invest in the markets. I will see you next month in May, unless some major event or news event happens to the markets, then I would probably make some sort of video about that. Thanks, guys. Goodbye. See you next month.